Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
John, how are you doing?
Sam, I'm doing fantastically, but not as well as maybe some other people are.
I think I have some ideas.
Well, people that have invested in Bitcoin and all other types of cryptocurrencies really since the end of the election, but even a little bit before that, have absolutely enjoyed watching their virtual wallets just absolutely explode. Cryptocurrencies as defined by Bitcoin, at least, here today on, what is it, the November 20th, 2024, comfortably up over 90,000. Man, it's been one hell of a ride in a very short period of time.
It has, and the election has probably put a little bit of animal spirits into it where, nothing's really changed that much, but, the sentiment and the incoming administration is kind of and arguably going to be more pro-crypto. At least that's the feeling. So.
Well, I guess that'd have to be the feeling. I'm not sure if I saw too much about Donald Trump being completely pro-crypto. Unless I missed something. I didn't see him come out. I didn't see any huge headlines saying, hey, we're going to shift to crypto or anything.
No, it's nothing. Again, it's not this. We're going to, people are talking about us having a Bitcoin reserve. I haven't heard anything of that. But, when you are putting people in place like Howard Lutnick, who's been a huge crypto component, huge Bitcoin component as the Commerce Secretary, you're having meetings already with Brian Armstrong, who's the CEO of Coinbase. Yes. These kinds of meetings, the people surrounding him and his administration, J.D. Vance owns, based on his filings, owns a significant amount of Bitcoin. All these people put in place. Elon Musk is his number two, essentially. He's a huge believer. So it's those kinds of things. What's going on around him, I think that has made the sentiment change.
The perception is, from what you just said, the perception is that over the next 4 years at the least, cryptocurrency investors do not have to worry about the U.S. government coming down.
Yeah, and Gary Gensler who has been one of the biggest headwinds to the crypto kind of into mainstream investing with the SEC. He's out. So it's kind of all these kind of headwinds seem to be dissipating, and all these tailwinds seem to be coming on right now. And
so I guess it's kind of a win for cryptocurrencies just by the very fact that some obstacles have been removed, and if nothing else happens, nothing happens. And that is enough of sort of a tailwind for people to say, okay, I'm going to hold on to this for a while, but now all of a sudden this is happening. People are going to go, all right, time to add a little bit more.
Even Bitcoin it's a voting mechanism for risks in a sense. Yeah. Any asset is, and we just took essentially, or at least it feels that way, took a lot of the risk of cryptocurrencies off the table basically in one night.
Well, there you have it. All right, guys. Thank you all so much for listening. No, in all seriousness, though, you and I've talked about this, and I've talked about this really since crypto has been around. So people sit there and say, well, Norris, you've kind of missed the boat. And I'm not sure if I really haven't. While Bitcoin is up over 90,000 here today, and it's had a wonderful run, I feel as though we've seen this play out on a couple of occasions. You have this wild moments of euphoria, and then, bam, it's over. It's kind of like, it's gone up enough. Let's stick a pin in it and it'll deflate back down.
Yeah.
Hasn't been that long ago where people kind of look at me, well, why are we doing this? Why are we doing this? And I'll tell you the same thing that I've told you in the past. The term cryptocurrency to me is almost kind of a misnomer. Mm-hmm. Who would actually use Bitcoin as a method of currency?
Well, I think the currency word is almost getting dropped from it.
Yeah.
I think it is shifted to this is crypto.
Yeah.
And that seems to be kind of where the direction is headed, is more about it as just an asset. That was at least the mainstream understanding. People were using it to purchase things, often illegal things or what have you.
What do you mean by that?
Just all kinds of things, John.
Nutty stuff.
Yeah, nutty stuff. But the word currency seems to have been dropped from it largely.
Yeah.
It's not in the mainstream kind of vocabulary as much when talking about it.
And for good reason, because let's think about it, currency. And I've used this example before. Sam, would you go to the Chevron on Euclid Avenue in Crestline Village in Mountain Brook and use cryptocurrency to buy a 6-pack of beer and a bag of Doritos?
No.
And why wouldn't you?
Well, if I think it's going to go up, why would I?
Well, exactly. So why would someone that buys a cryptocurrency, a Bitcoin, Cardano, whatever your
Cardano.
code, how about that, Shiba Inu and all that stuff. Those people that are out there buying cryptocurrencies, investments on the blockchain, why would they go buy something that is going to depreciate or is going to be immediately consumed with an asset that is going to go up in value?
Well, the flip side of that is saying what would happen in deflation. I mean, that's exactly what you're talking about. If your Bitcoin's going to go up, you can purchase something for less the longer you wait,
Yes.
and that's a dangerous. That is the same concern around deflation. It's the exact same thing. Why would I purchase it now if prices are going to continue to go down? And that's why the federal government or the Federal Reserve is more concerned. We've talked about it. Deflation is a bigger risk than inflation.
Yeah.
There's a reason they want a little bit of inflation.
Yeah.
Without it, you have no incentive to not put cash out of the system and put it under your mattress.
Well, you're right about that. And so when you take a look at the use of the word currency. A currency is a method of exchange, first and foremost. And right here, we're talking about how cryptocurrencies, Bitcoin, what have you, generally are not great methods of exchange because people want to hold on to. Mm-hmm. You're not going to buy that Jack Link's beef jerky, which is delicious, by the way, if you like beef jerky. You're not going to buy that with cryptocurrency because you're going to immediately consume the Jack Links. It's going to be gone forever, whereas you want your cryptocurrency to stay around for a long period of time. So it doesn't meet that neat definition of a currency. And then also it's got to be a store of value. Now, people would sit there and say, listen, 10 years ago, you could buy crypto for nothing. You could buy Bitcoin for nothing. Now look at it. What a wonderful store of value. And I would say, yeah, right now. But the wild swings that we have had in it have been anything but, sort of what I would call a store value. I mean, store value, I think you want some sort of predictability in it, whereas it's almost like it's behaved almost like a microcap stock.
Right.
And I wouldn't say microcap stocks. I'm not going to let you talk, by the way. You figured that one out? Microcap, you would not say microcap stocks are a store of value. You would say that those are a long-term investment.
Right. And even if you were removing the volatility, these sharp moves upward are something that you aren't really a characteristic of a store of value either.
Well, that's what I'm saying.
Yeah, I mean, even removing the volatility, like a store of value, I mean, so that's where I think the discussion is moving away from a currency and moving to, I've heard them use the term, different people, some agree with it, some don't, but digital gold.
All right.
Is what, in asset class. This is
digital gold.
Not something you're going to be spending, but something, if you view gold as a good asset, you want to build it up, and you're frankly, ideally, never really touching it. Right? This is just a long-term compounding thing. The concern over currencies collapsing, I mean, all those kinds of areas are where Bitcoin seems to have appeal. But the concern to me is why does it track so well with other just high beta assets that have nothing to do with crypto? Why do the Cathie Wood ARK funds seem to track Bitcoin so well when there's no Bitcoin in them? I mean, all these assets that move a lot compared to the market, compared to the average return, why are they all tracking each other? And so that seems to me where and why Bitcoin has gone up more than anything. Yes, the headwinds being removed is a big part of it, but we're just inarguably in a point where people want risky assets right now. People want things that go, these highly volatile assets right now, and that is just one of them. So,
it's almost like you're making a case for really crypto just in general being another high beta asset class. It's really no different than any of those other ones, at least in terms of the risk characteristics that the average retail or institutional investor is going to take. Buying crypto is really not any different than buying XYZ or some other thing that they're putting in their portfolio to add beta.
Right. It's beta. That's exactly right. And that there's a difference between alpha and beta. Those are the kind of the two key Greeks for your return in your portfolio. Yeah. How much of it is, hey, I'm just taking more risk in a time where risk is doing well versus how much of it is the return above the amount of risk you're taking. And I'm just, the alpha to me has not been there compared to the beta of it.
So right now there are plenty of smart people or people that think they're very clever going, listen, hey, I hear what these guys are saying. Maybe I should go construct a portfolio that has a optimal mix of crypto, utility stocks, short-term treasuries, and gold. Mm-hmm. If you do something like that, you have all of a sudden you create a portfolio that might not have really terribly much volatility at all, and a slight positive rate of return, and there you win.
Sure.
What do you think about that?
Why not?
Why not? So I would tell you that I agree with you, and I've told plenty of people this when they would talk about cryptocurrency or just crypto, assets out there in the ether. That one of the arguments for crypto in the past has always been, the inherent worthlessness of fiat currencies, right?
Yep.
There's really nothing. There's no real intrinsic value
off the gold standard,
off the gold standard, all that stuff. And then I counter that with, where's the intrinsic value of things that are out there on the blockchain somewhere?
Where's the intrinsic value of gold?
Yeah, where's the? Well, at least you hold it. That's it. But
it doesn't do
there's not necessarily any inherently intrinsic value to let's say Bitcoin here in this case. And then people say, oh, what are you talking about? They only created X number of millions of them. Well, the problem with that is they've divided them into so many Satoshis that they could probably divide them into Satoshis again. There's really no, you could divide Bitcoin up into so many different minuscule parts that it's just, it's almost as infinite as the amount of money that's floating around. And to prove that point, all you need to do is go to my Coinbase account, where I think I own something like one billionth of a Bitcoin in that account, and it's gone up in value. And gee whiz, don't you know it? I've got an extra $3 to spend. But I'm
not going to spend it. Right? You're going to keep it in the...
Without a doubt. And who knows? By the time I retire in 40 years, something
maybe
like that, it might be $5. I go through all that because, I think the technology is really neat. I mean, when I got into this industry, people were thinking international investments were sort of out there. People were talking about a secondary mortgage market with Ginnie Mae's. Hey, that was still relatively new. Came around the 80s. If you ever read the book Liar's Poker, it's a great one by Michael Lewis. And all that stuff is still relatively new. So now we're talking about assets that are out there. You can't even see them. I mean, you can't even come close. There's nothing to see. Mm-hmm. I mean, there's no earnings. There's no interest. It's almost like gold, but an invisible form of gold, and it's hard for a lot of people to wrap their brains around. Now, I would tell you that for me, thinking about it like that is almost kind of like thinking about like the internet was in the back half of the 1990s. Mm-hmm. I don't understand the technology. I mean, people can explain it to me. Okay, that's fine. I get it. Being honest, it's pretty cool. We can talk about servers, right? We can talk about all this stuff. No, I don't really get it. Okay, it's neat. I get it. I get it that I don't get it, and then I use it, and it's forever changed my life and how we conduct business. The same thing could be said of the technology that's involved in the blockchain, and off of it just not correlation, but just by being in conjunction with it, cryptocurrencies and NFTs, all this stuff. It's not that they aren't good assets. It's not that they aren't assets or good, decent investments. I'm just not sure the markets truly know how to price them. And I would say even right now, most people really don't know truly how to price a single Bitcoin, other than the fact of it's in FOMO trade. Every time we have this type of deal, a fear of missing out, I've got to buy in. I've just got to buy Bitcoin. And then all of a sudden, someone who's much wiser and smarter than you and has more invested will sit there and go, all right, I've made enough money this go around. I'm going to start selling. And then the person who buys in at 94,000 or whatnot ends up holding the bag, and then the whole thing starts over again. What do you think about that?
That's a lot. A lot to think about.
Yeah, a lot to think about.
But, until it starts to, how do you calculate, at least with companies, you can go back to the cash flows of it and what have you.
Yeah.
I mean, there's what does price discovery look like for an asset? And again, I don't think you're in price discovery when it's going up with other high beta assets that are completely uncorrelated.
Yes.
Companies... any type of investable asset that has a high beta to it, why are those going up almost in lockstep? Because people want beta right now.
Yeah.
That is not price discovery. So
what happens to all these high beta assets and asset classes when maybe we start off the beginning of next year with a slower economy and an uptick in unemployment rate and all these many wondrous things that people thought the Trump administration is going to be able to do on day one and will not be able to do, what happens to all these assets when all of a sudden reality splashes a cold glass of water in the face?
Well, beta's a two-way street. We've said the word beta probably 100 times.
It's just a measure
already.
of volatility for those who are following
It's a two-way street, though, and we've seen it when it tends to go up. I mean, we've seen Bitcoin at 80,000 before. We saw it plummet after when the market pulled back and beta was not and very attractive at the time. And so again, I just don't know how you separate Bitcoin from being beta until you get some quality price discovery, and I don't know how you do that. So again, and I have frankly softened a little on it as a portion of people's assets if that's what they want.
Yes.
It's speculative. There's no value intrinsically tied to it, but it is well enough accepted now. If you want a portion of your portfolio to be beta, if it's the appropriate amount for you, go ahead.
What if I were to come to you and I would sit there and say, Sam, I've done my homework, and I think Bitcoin is $150,000 per unit. What would you say about that?
Okay, then
prove it.
Yeah.
I mean, wouldn't you want to know how
Sounds
I came?
great.
Wouldn't you want to know how I came to that conclusion?
Yeah.
And then the same thing, you can say that for a lot of things, at least if nothing else. And while I've been doing this for a very long period of time, and in business school, they teach you all about these things like dividend discount model and all that stuff. They're probably still teaching that now, but it's like no one pays attention to it. I mean, I in the 30 plus years I've been doing this, I don't think I've ever heard an equity strategist once say they are valuing stocks necessarily solely on the dividend discount model.
No.
And so all these traditional valuation techniques that the markets have used or have said that they've used over the years, I think we would throw all this out the window when it comes to some of these new asset classes, because you're right, there are no cash flows with this thing. There are no dividends. There's no earnings. There's actually nothing. I mean, there's actually nothing out there, and it's kind of like you're betting on a figment of your imagination. You're buying a virtual something to put in your virtual wallet out in the ether, and that does take a special sort of person to sit there and go, okay, I'm comfortable with that.
But what that does too is, I think it was Peter Lynch who's big on it, but the term margin of safety, meaning this is what this is worth. Yeah. This is the cash flow that sets this asset worth this much. Even stocks go below that at times, but you have this margin of safety, meaning if I'm buying it below this, like that's a magnet. Yeah. Obviously, that value can change.
Well, certain assets, I can at least come back to some sort of calculation saying this is what this is worth to me. You can throw a risk-free rate on there, and you throw whatever variables you want on that.
Cash flows or what have you. If something's intrinsically worth $100 and the market sells off and it goes to be worth 90, 80, maybe it keeps going lower, but I have comfort in knowing over time I can stomach this for a while.
Cash flows and the dividends that I'll receive will come back to me, and this will be fine.
And it'll, at some point when the market turns around, draw back towards that kind of margin of safety. However, when you don't have any price discovery, that's what leads to these big swings, because all you're basing it on is if there's more buyers or more sellers, essentially. Yeah, or more demand for buying or more demand for selling.
Again, that's what's called FOMO, right? Yeah. The fear of missing out. And so how much of it would you say this most recent rally in crypto has been due to the FOMO trade?
A lot. I mean, it's a little bit unique in the sense that we're in a high beta rally, but on top of that, again, we are having a lot of these kind of worst case headwinds kind of dissipating from it. That's helped other non-crypto related assets as well. Yeah. But it seems like this is a time where crypto may be leading other high beta assets rather than high beta just drawing Bitcoin up.
Now, if you were to look into the crystal ball that's literally on the desk that where we record trading perspectives. So if you were to take a look in that crystal ball, besides seeing an upside-down vision of your face, what do you think the long-term prognosis or prediction, if you will, for, I'm just, again, using Bitcoin as sort of a proxy for all of crypto, what do you think the long-term prospects are for crypto? What do you think some of the advantages are? And what do you think some of the disadvantages are?
I think it probably, my base case is that it just continues the trend it has, and zooming out, I mean trend over the last several years, these big upswings, these big drawdowns. We're still at a time, I don't think people are going to get more confident in the US dollar or more confident in things like that. So I think we just get more of the same. That probably leads the price to over longer time horizons for now, at least. I mean, I can't see 10 years into the future, but I think this trend that we've been in with these big drawdowns trending upwards is probably something that continues to happen.
So what do you think maybe the biggest threat to crypto assets is?
A change in sentiment around it, a change in federal policy around it. I mean, this is something that could change in 4 years.
It could change in
2 years.
Yeah.
So you are at the whims of where a couple thousand voters in Michigan and Pennsylvania
are going to determine the size of your wallet.
It could, yeah. Or at least have a pretty big impact.
And I think that's a very real threat. While we started off this podcast talking about the various members of people of the administration that are at least perceived to be crypto friendly, what happens if we get that sea change? And it won't take too much for people in Washington, or maybe even London or Paris or other major sort of economies around the world to say, hey, we're going to regulate the hell out of this. We're going to regulate this just like we do the currency market, just like we do the individual stock markets. We're going to regulate this, and we're going to get down to the bottom of it. We're going to get down to the bottom of this and figure out exactly what this is. And by God, we're going to put restrictions and capital controls on our citizens. And I think that's a very real threat. Despite what we said about crypto-friendly people being in this current administration, I do think that is out there at some point. Maybe not the next 2 years, maybe not even the next 4 years. But the more we see this particular asset class shoot up the way that it has, after all, understanding that it was originally designed to keep money away from the official channels and out of the reaches of various central governments, I do think at some point central governments and central monetary authorities will have enough of this thorn in their side and try to regulate that. And when that happens, guess what happens to prices?
It's probably not great.
It's probably not going to be terribly great. And going back to talk about cryptocurrencies, or again using that term currencies, crypto being used as a currency, I still don't get there.
I think that argument's kind of out the window.
You think so?
I think so.
Does everyone else think so?
I think so.
Okay.
Mostly.
So it's just another asset class.
It's an asset.
So are we going to? So if Bitcoin's doing this, what's the likelihood we're going to see NFTs come back into favor?
I think less so. I think that.
But what's the real difference?
I guess not much,
Yeah.
but I think the lack of rebound in some of those. I mean, I think that
the $1 zillion for a picture of a monkey out there on the blockchain
that you buy for $10 million and sell for $200. That's hard to rebound.
Yeah, I think that's real hard to rebound. However, I do think at some point people will get more comfortable with that again. I don't think we'll ever have the mania that we had a few years ago. However, I wouldn't be surprised if all of a sudden we start seeing people start talking about NFTs again, and just a way of just kind of shielding some money out and away from our financial system and away from the IRS, and I do think that's going to happen.
I don't disagree.
And then they'll try to regulate it.
There you go.
And so then you'll be stuck with your $200 picture of a orangutan. All right, guys, thank you all so much for listening. We always love to hear from you. Also, if you have any comments or questions, by all means, let us know. You can always drop us a line at tradeperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more or hearing more of what we got to say, you can go to oakworth.com, OAKWORTH.com, take a look underneath the Thought Leadership tab, and find links to all kinds of exciting information, including previous Trading Perspectives podcasts, links to our blog /newsletter Common Sense, as well as links to our quarterly analytical piece /magazine called Macro and Market, as well as all the helpful items that our advisory services group, led by Mac Frazier, have out there, as well as some of our client advisors. Richard Littrell and Janet Ball, and amongst others, have some good stuff out there as well. So with that, Sam, anything else here to talk about this exciting asset class?
That's all I got.
That's all I've got today, too. Y'all take care.